when we look at, I guess, the operational side of hotels and the assets themselves, predominantly in the Australian market, what we see from the operator is a management agreement or a franchise agreement that keeps a operational investment, I guess, with the owner of the asset. But a subsect within that that we have here, and that's probably more prominent in Europe, is the leased hotel space. So you've got groups locally like Quest, Very Radisson, Urban Rest that are now doing leases, and that's probably the more traditional side of asset ownership in Australia, similar to your office, your retail or industrial. These operators will come in and put a lease over them. Now, there hasn't traditionally, I think, probably been as much appetite for investors to buy into leased hotels here. It's pretty much been a developer-owned space, a private high net worth owned space. But we now are starting to see a bit of a trend around sort of smaller or mid-tier funds starting to try and piece together portfolios of these leased hotel assets.
When you think about what's happening at a macro level, I suppose, cost of capital, cost of construction, leases are essentially becoming a necessity in a way for groups that want to move into hotels that perhaps don't have the operational experience. So in the past, groups have moved towards management agreements as their level of sophistication of operations has expanded, and on a global scale, management agreements, franchise agreements, they're very, very common when it comes to the way that a hotel is run. But looking at leases in isolation, our view is that it's probably a growing sector of the market. And why? Well, taking a lease to a bank is a much easier way to get funding than to take a management agreement, especially for out of the ground projects. Again, it's a really difficult environment for a hotel developer right now because of all the things we've touched on. But from a leasing point of view, we're starting to see a number of brands that previously either haven't been in this country or perhaps haven't looked at doing leases in the past, now starting to shift their focus towards them.
Yeah, I think it really solves one of the key problems for developers and for hotel supply in general in the Australian market. As you touched on, construction costs are making it really challenging to actually deliver brand new hotels to the market. But if you can go to the bank and have, in other words, a pre-lease from a global operator, like a Quest or like a Very or Urban Rest, you can go to the bank and say, hey, when this is completed, we're guaranteed to have X dollars of income coming in on day one, rather than having to take the punt on variable income from a management agreement or a franchise.
But our view is, as the market lifts their eyes a little bit and we've started to see a diversification from some of the larger groups who might traditionally only buy office or only buy retail or industrial, I think COVID's shown them that there needs to be some diversification. So they are looking at hotels and they are speaking to us about, well, how can we get into hotels? We need a lease. And I think if some of that capital shifts into this subsector of the hotel market, we'll start to see lease hotel yields start to compress.